Hello friends, James Stephenson back with a fresh chart talking about Tesla's PE ratio compression. What are we talking about with PE ratio compression? Loki and I will explain in this video. Let's check in with Loki. Well, he may be doing about as much explaining as he normally does. He looks like he is trying to catch a nap. So how are you holding up during this bear market? If you're a Tesla hodler like me, you are focused on earnings growth. So what do I mean when I say earnings growth? Well, let's take a look at two fresh charts that I made. We'll get to that one in a second. Here's the first one. This is just Tesla earnings per share on a trailing 12-month basis for every quarter going back over the last 3 years. Now, you'll notice there's a different color at the bottom for Q4 of 2022. The reason for that is we don't know what earnings Tesla is going to report yet for Q4 of 2022. That's the current quarter. It's not over yet. But I do have my forecast shown for what I think the trailing 12-month earnings per share will be. There, that's a little better. For that quarter. And then for each of the previous quarters, those are actuals. So these are sequential growth from one quarter to the next. A lot of companies would love to have this much growth year over year. If you want to see what the year over year growth is, you need to skip 3 bars every time you compare. So for Q3 of 2022, this $3.71 over the trailing 12 months that ended Q3 2022 compares against, skip this one, skip this one, skip this one, the $1.68 that happened over the trailing 12 months ended Q3 2021. And then if you want to see how that number compared against its prior year same number, you got to skip this one and this one and that one and see 58 cents worth of earnings per share Q3 2020. So Tesla's earnings are growing, 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 but the share price has not been growing, growing, growing along with the earnings as it should under normal circumstances. Why is that? Well, the PE was pretty high already, factoring in that a lot of this earnings growth was going to happen, and then we got a bear market, and Tesla's share price got beat up quite a lot. Thus, the funny video meme idea here about having to hold on and focus on earnings growth through a bear market. So, let's look at how the PE range is compressing over the past couple of years, the same time period we're about to look at. So this is a fresh chart. I made it at the request of a viewer named Daniel Burchell, who described it in a couple of tweets. And this is my best attempt at figuring out what that chart would look like based on the description Daniel gave me. But for each one of these quarters, we're looking at 3 lines above every quarter. We're looking at what the high PE was during the quarter, so based on whatever the highest price was that quarter, divided by that quarter's trailing 12-month total non-GAAP earnings per share. Then there's a quarterly low, that's the yellow line here. What was the lowest PE during that quarter? And the other line, the one in between, is the quarter end PE. Okay, at the end of that quarter, what was the share price? And if you divide that by the trailing 12-month earnings per share, what PE ratio would you get? So 2020, this Q2 2020 low of a 67 PE was on March 18th of 2020, the height of the COVID panic freak out stock market crash that happened, right? So it dipped down to that level, that was the low, and then by the end of the quarter it was already up to more than double that, 159, right? And the stock price kept going up and up and up as investors priced in the earnings growth expectations, right? So these are the lofty PE valuations that people were making fun of and saying, well, Tesla's overpriced. What's interesting about that is, as Tesla's earnings have been growing, we just saw Tesla earnings going up and up and up some more, the PE ratios have been coming down, not just the high, but also the low. Look at this steady PE compression on the lowest PE of each quarter. We did have, at the end of 2021 Q4, a pretty high share price. There was a 183 PE there, almost as high as it was in Q2 of 2021. But then it's been coming down and down and down some more. Now, Q4 isn't over yet, so we don't know what the ending PE ratio is going to be. But if the share price doesn't hurry up and move up a lot from where it was just a few days ago at a PE of 38 on a trailing basis, friends. Now, these numbers do incorporate my forecast for what's going to happen in Q4. So to the extent that my forecast is wrong, these numbers will change a little if I update this chart again after next quarter ends and Tesla reports the actuals. But we're probably looking at a PE for Tesla less than 50 to end this quarter, unless the stock price really gets it in gear and moves up a lot soon. So I just added those to my detailed model. These rows were not even on the forecast that I tweeted out last week. That's how often I make edits to this forecast model. So you can see Q4, not a done deal yet, so we don't know what the quarter end share price is. But I did put some fun formulas in here. Let me view the formula bar to figure out what the high price and the low price are for each quarter throughout Tesla's history. You can just pull that information off the internet. Lots of places. My Stephenson indicator model just pulls it every day from Google. I think I just pulled this in from Yahoo Finance and dropped it onto my Tesla daily chart. Let's check in with Stephenson indicator. Here's how that's looking in my live model, or in my forecast model. I also have a live Google sheet that does the same thing. All right, what else did I want to talk about in this one? I told you what time it was. I told you how I made the clock. Yeah, so what's going to happen going forward? Well, I know Tesla's earnings are going to grow. So these earnings numbers are just going to keep getting bigger. Tesla's going to keep smashing earnings records. What's going to happen to this PE compression chart? I don't know. It can't go down to zero. Zero is too low. It's going to have to stop this decline at some point pretty soon. So that is my video for today. Let's check in with Loki and see how he's doing. Still where he was. And I'll invite you to click the like button if you like today's video. That lets other people know that they should check this video out. And if you're not subscribed to my channel, why not go ahead and subscribe to my channel so you can see fresh content as I create it and publish it. And a special thanks to my two executive producers, Kathy Kitchler and Halter Ferguson Financial, and I'll see you in the next one.